SEI just printed $10 billion in DEX volume over 12 months, and while everyone's celebrating, two top analysts are pointing at the chart saying the same thing. We've seen this movie before. Last time SEI sat at these exact price levels, it ripped 140% in weeks. Now, it's back in the same zone, accumulation is heating up, and institutional wallets are quietly positioning. If you missed the first pump, this might be the universe giving you a mulligan. But the window, it's closing faster than you think. Welcome back to the channel. If you're here because you love catching altcoin setups before they go parabolic, you're in the right place. Do me a favor, smash that like button, hit subscribe, and turn on notifications so you never miss these time-sensitive analyses. Trust me, you'll want to be early on this one. SEI price is currently hovering around 19 cents, sitting in what analysts are calling a re-accumulation zone. According to crypto analyst Patel, this isn't just any consolidation, this is the exact same price range, between 16 and 20 cents, where heavy accumulation happened before SEI's monster 140% rally earlier this year. That's not coincidence, that's a pattern. And patterns in crypto? They love to repeat until they don't. Here's what makes this interesting. SEI isn't some random meme coin pumping on hype. This is a layer 1 blockchain designed for high-performance trading applications. We're talking speed, scalability, and infrastructure that institutional players actually respect. The fundamentals are rock solid, and that $10 billion in DEX volume over the last year, that's not retail gamblers, that's real DeFi activity, real liquidity, and real institutional confidence building. But here's where it gets spicy. Right now, SEI is doing what I call the boring dance. Sideways price action, tight consolidation, candles that make you want to check Twitter instead of your portfolio. Volume's been quiet, momentum's been flat. Most traders have already moved on to the next shiny thing, and that's exactly when the smart money strikes. See, after SEI cooled off from its last rally, sellers exhausted themselves. The chart shows smaller and smaller candles, which tells us one critical thing: nobody's panicking to exit anymore. Sellers are drying up, and when sellers dry up while buyers quietly accumulate, that's called the calm before the breakout. Patel's chart analysis shows we're sitting right on top of that accumulation base, the same launching pad that fueled the April surge. But there's a catch. If SEI can't hold above 16 cents, this whole setup collapses. We could see more sideways chop, more frustration, maybe even a deeper dip before any real move materializes. The bulls need to defend this level like their portfolios depend on it, because, well, they do. Now here's where my expert take comes in. I've analyzed hundreds of accumulation patterns, and SEI's chart is textbook. According to Patel, if this cycle repeats, we're not looking at a modest 20% bounce. We're potentially staring down a 5 to 20 times rally if the fundamentals hold and Bitcoin doesn't ruin the party. Let me put that in perspective. A 5 times move from here puts SEI at 95 cents. A 20 times move, we're talking about $3.80. Now, am I saying that's guaranteed? Absolutely not. But the risk-reward setup? It's juicy. Market analyst Martinez backs this up with his own technical outlook. He notes that if SEI maintains support at current levels, a rebound toward 31 cents is on the table, with an extended target near 44 cents based on the ascending channel structure visible on TradingView. That's a 130% gain from today's price, just hitting the first target. Not bad for holding a position through some consolidation, right? What I love about this setup is the confluence. We've got multiple analysts, Patel and Martinez, calling the same play from different angles. Patel's focusing on historical accumulation patterns and fundamental strength. Martinez is zeroing in on technical support levels and channel dynamics. When independent analysts arrive at similar bullish conclusions without coordinating, that's when I start paying serious attention. But, let's keep it real. SEI needs to actually break above 30 cents for this thesis to activate. That's the level that flips the script. A decisive daily close above 30 cents would signal that accumulation is complete and distribution is beginning. Meaning the big players, who've been loading up, start letting retail chase the breakout. That's when momentum kicks in, FOMO floods the market, and prices start doing that thing we all love, going vertical. Patel describes SEI as having strong backing, proven accumulation patterns, and institutional confidence. In my experience, that trifecta is rare. Most projects have one or two of those things. SEI has all three. That's the kind of setup that attracts long-term investors, not just degenerate gamblers looking for a quick flip. And long-term investors, they build floors, not ceilings. History might actually be repeating here. The chart pattern, the price range, the consolidation behavior, it all mirrors what happened before the 140% rally. As Patel bluntly put it, history repeats. Are you taking it? That's the million-dollar question. Are you going to wait for confirmation and buy at 35 cents after the breakout, paying premium prices? Or are you willing to position now, accept some short-term chop, and potentially catch the entire next wave? Look, I'm not here to tell you to mortgage your house and go all in on SEI. What I am saying is this: the setup is there, the analysts are aligned, the fundamentals are strong, and the chart is whispering what it whispered before the last rally. If you miss the first 140% pump, this could legitimately be your second chance, but timing matters. The accumulation window doesn't stay open forever. If you found this analysis valuable, go check out my other videos, and don't forget to drop a comment below. Are you accumulating SEI, or are you waiting for confirmation? Thanks for watching, and I'll see you in the next video. Quick reminder, everything discussed in this video is for educational and entertainment purposes only. This is not financial advice. Cryptocurrency is extremely volatile and risky. Never invest more than you can afford to lose, and always do your own research before making any investment decisions. Stay safe out there.